So, you've got $100. Not a lot, not enough to impress anyone, just a small amount sitting in your account, doing nothing. And maybe you've thought about investing it. But then the doubts kick in. Is $100 even enough? What if I lose it? Should I just wait until I have more? That's exactly where most people get stuck. They don't fail because they don't have money. They fail because they never start. They keep waiting for the right moment. More income, more knowledge, more confidence. And that moment, it almost never comes. Because the truth is, investing isn't about how much you have. It's about what you do with what you do have. And $100, that's more than enough to begin. Now, let's be honest. This $100 is not going to turn into $1 million overnight. It's not going to magically double next week. And if that's your expectation, you're setting yourself up for disappointment. But that's not the point of your first investment. The real goal is something much bigger. It's to change your behavior, to shift from being someone who only spends money to someone who actually grows it. Because once that shift happens, everything changes. Here's what most beginners do. They take that $100 and immediately look for the fastest way to multiply it. They chase hype, a trending stock, a crypto coin everyone's talking about, some insider tip they saw online. And sometimes they get lucky, but most of the time, they lose money, and more importantly, they lose confidence. And once that confidence is gone, they stop. Not just for a week, sometimes forever. That's why the smart way to invest your first $100 is not about speed. It's about building a system you can repeat again and again, without stress, without confusion, without second guessing. So let's slow this down. Let's make it simple, because investing doesn't need to be complicated. In fact, the simpler it is, the more likely you are to stick with it. First step, you need a place to invest, a brokerage account. This is just a platform where you can buy investments. If you're in the US, you've got plenty of options: Robinhood, Fidelity, Charles Schwab. But here's the thing, the platform you choose doesn't matter as much as you think. What matters is that you actually open one. Because until you do, you're not investing, you're just thinking about investing. Once your account is ready, now comes the real question. Where should that $100 go? This is where beginners usually overcomplicate everything. They think they need to research hundreds of companies, watch charts, analyze trends. But with $100, that's not the game you should be playing. You don't need complexity. You need consistency. So here's the smart move. Start with an index fund. If that sounds technical, don't worry. It's actually one of the simplest investment options out there. Instead of buying shares of a single company, an index fund lets you invest in a large group of companies all at once. Think of it like this. Instead of trying to pick one winning company, you're buying a piece of the entire market. One of the most common examples is the S&P 500. It includes 500 of the largest companies in the United States, companies that have already proven themselves over time. So when you invest in it, you're not betting on one company's success. You're investing in the overall growth of the economy. That's why it's considered one of the safest ways for beginners to start. Not risk-free, but lower risk compared to picking individual stocks. So your first move is simple. Take your $100 and put it into a solid index fund. No need to split it, no need to overthink it. Just start. Now here's where the real strategy begins. Because the first $100, that's just the beginning. The real power comes from what you do next. Most people treat investing like a one-time action. They invest once and then stop. But investing is not a one-time event. It's a habit. So instead of asking, how much will this $100 grow? Ask yourself, how often can I do this? What if you added $20 every week or $50 every month? Now you're building momentum, and momentum is everything. Because once you get into the habit of investing regularly, your money starts working for you. This is where compounding comes in, and this is the part most people underestimate. Compounding means your money earns returns, and then those returns start earning returns too. At first, it feels slow, almost invisible, but over time, that growth starts to accelerate. Years go by, your investments grow, and suddenly, what started as $100 becomes something much bigger. Not because of one big move, but because of consistent small actions. Now, let's talk about something important, because at some point, the market will go down. It always does. Your $100 might drop to $90, maybe even lower. And when that happens, most beginners panic. They think something is wrong. They feel like they made a mistake, and they sell. But here's the truth. Market drops are normal. They're part of the process. The people who succeed in investing aren't the ones who avoid downturns. They're the ones who stay through them. They don't panic. They don't quit. They stay invested. Because over the long term, markets tend to go up. So instead of reacting emotionally, you stay consistent. You keep investing. Now let's zoom out, because this is bigger than just money. This is about how you think. Most people earn money and immediately think about spending it. Investors think differently. They earn money and think about growing it. That shift in thinking changes everything. Because once you start investing regularly, you're building something that grows over time, something that works for you even when you're not working. So if you're still thinking it's just $100, you're missing the bigger picture. That $100 is your starting point. It's the moment you stop waiting and start doing. Because once you take that first step, you're no longer someone who plans to invest. You're someone who actually invests. And that identity, that's what builds wealth. So don't wait. Don't overthink. Don't try to be perfect. Start with what you have. Start with $100. And most importantly, just start.